No matter what your income or age, you can achieve financial independence. In this video, I share with you the real maths and numbers that can help you achieve FI. You will be surprised with how little it takes. So if that's of interest to you, please stick around. Hi, welcome to the TurboFi channel. I spent over 20 years in the technology industry and led investments in mergers and acquisitions. On this channel, I cover a wide range of investing topics, including building an investment portfolio, achieving financial independence, technology trends, investment ideas, and trades. So if that is of interest to you, please click subscribe. I post new videos regularly. Let's get started. Given my finance background, I love numbers. When it comes to finance, numbers provide clarity that opinions just cannot. In this video, I run some scenarios and discuss what it takes for an individual, even with very modest income, to achieve financial independence. But before I get into the numbers, let me spend a few minutes on the topic of financial independence and just define how I see it. To me, financial independence is not about retirement. To me, it is the whole point of saving and investing, whether you realize it or not. And it's not optional. Each one of us should be pursuing it. It is an imperative. This might sound dramatic, but it's true. Financial independence comes in multiple stages, and at each step, it empowers you to take more control of your life. To me, money is a means to an end and not the end goal itself. It helps you achieve your goals. If you understand that, you will make good decisions in your life. For example, having just 6 to 12 months of retirement savings allows you to reduce your daily stress. You can relax a bit, be fully present with yourself and your loved ones rather than worrying about money and putting food on the table. Having 2 to 3 years worth of expenses saved up can buy you your dignity and respect and help you grow your career. For example, you don't have to put up with an employer that does not treat you well. You can look for another job, get new skills, move up the career ladder, and get a higher paying job. Or you can take that vacation you've always been dreaming of, or pursue a hobby you've been wanting to. With even more savings, let's say a few years of savings, you can take extended time off work to try different things. Life gets progressively easier, at least financially. You feel more confident making decisions and are likely to make better personal decisions as you're less pressured by factors that push you towards survival mode. Finally, when you hit escape velocity, that is the final stage of FI, where you have sufficient funds saved up such that your portfolio can fully support your expenses, you can truly and fully focus on what is important to you. At this stage, you work because you want to and not in servitude. You can go start that business you always wanted and be your own boss. You can take as much time off as you want to spend with family and yourself. Enjoy those precious moments with your loved ones that you will treasure forever. You're free to explore yourself and your interests that got buried by survival instincts earlier in your life. You can go volunteer for that charity or support a cause you've always cared about. You can travel the world, expand your horizons if that's your thing. The possibilities are endless. And there is no conspiracy stopping from achieving financial independence. No, the markets are not rigged. No, the financial system is not rigged. But you need to learn the game if you want to win at it. If you keep fighting it, you will not get ahead. Take a long term perspective if you want to win. Get rich quick schemes don't work. I've been broke multiple times, and I can tell you that achieving all stages of financial independence is possible, no matter what your income. Yes, it does take discipline and a little bit of sacrifice. I like how J.L. Collins puts it. You're spending your money on what matters most. I would add to that and say you are purchasing your time, freedom, and dignity, and respect. And that's a goal worth working towards. So let's look at some numbers. What does it take to achieve financial independence? How big a mountain do you have to climb? So, here, as an example, let's say you save $1 a month. So that's $12 every year. At the end of 10 years, that dollar would be worth about $200. At the end of 15 years, it'd be worth about $400. At the end of 20 years, it'd be worth about $700. And at the end of 30 years, it'd be worth about $2,000. This doesn't assume anything special. All it assumes is you take that dollar every time you get it, put it away in a index fund, like a broad market index fund, like SPY or VTI. So why do I use the example of a dollar? It's because it's quite easy to calculate what you would have at the end of 30 years as you increase your savings rate. Let's say you can save $100 a month. You simply multiply all these numbers by 100 to figure out what the size of your portfolio would be at the end of each of these years. So, for example, at the end of year 10, you would have almost $19,000. And at the end of year 30, you would have almost $200,000. This just illustrates the power of compounding. Now, what if you could save $500 a month for the next 30 years? At the end of 30 years, you would have almost $1 million. And that's assuming you invested in a broad market index fund. Nothing special, no like growth funds, but just a broad market index fund. And I believe this is possible even on a very, very modest income. We will look at some numbers shortly. But what happens if you can increase your savings rate? Let's say you can put away $1,000 a month. This again doubles what you would have in each of these years. Now, by the end of year 30, you have almost $2 million. Not only does this illustrate the power of compounding, but it also illustrates that if you're just starting out right now, let's say you're in your early 20s, you have time on your side. And even with a very, very modest income, you can get to financial independence. And it gets even better. If you can save $2,000 a month, you can have almost $1.5 million by year 20 and almost $4 million by year 30. At this point, you would say, but man, I don't have this kind of income. I don't think I can save $2,000 a month. Well, you don't have to. I will show you in subsequent videos why $500,000 can get you to financial independence, assuming your expenses are modest and you're aware of the nuances of constructing a portfolio that can provide you the income you need to get to financial independence. So, as an example, if you can save $1,000 a month, you can get to financial independence somewhere between year 15 and year 20. How do you save $1,000? Well, you will need some sacrifice, cut back on expenses, maybe buy a less expensive car, maybe rent a more modest house, get a side gig, a side hustle where you can put away another $200-300 a month. Just do whatever you need to do to put away $1,000 a month. Now let's look at how much of your income would you have to put away at various income levels. So if you earn $60,000 a year, putting away $1,000 needs you to put away 10% of your income. So basically save 10% of what you make. If you earn $75,000 a year, that falls to 8%. But now if you make $100,000 a year, that falls to just 6%. And at $150,000 a year, that falls to 4% of your income, which is really not much. But remember, you're hitting other stages of financial independence earlier. So maybe you hit your first stage or the second stage of financial independence. You go out and get some new skills, maybe get a higher paying job, maybe get a college degree or a MBA, and you can get a significantly better job. And as a result, you can start saving more and it accelerates your journey to financial independence. Of course, there are some caveats here. As our income increases, we fall into the trap of an expanding lifestyle. That creep, the lifestyle creep, is something that you have to be really careful about. But if you can control that lifestyle creep, you can get to financial independence quite quickly, no matter what your income level. I know this is a short video, but it is by design. I wanted to show you just how easy it is to get to financial independence. No like crazy assumptions required, no massive rates of return, no extreme savings rate, just some discipline, constant saving and investing, and it is definitely possible to get to financial independence. Well, I hope you enjoyed this video. If you did, please click like and subscribe. I try to bring you new content regularly. And as always, stay happy and stay healthy. I'll see you in the next one.